S&P 500. Let's go back to the first slides here and talk through this so we can get this clipped up. So you got the S&P 500. So it's made up of 500 stocks, mostly large cap, U.S.-based stocks ranging across multiple sectors. You got Apple, Microsoft, Amazon, Tesla, Google, Berkshire in there, UNH, J&J, XOM. Those are all the top 10 holdings. They represent 28% of the indices weighting, and products can rotate in and out. They do quarterly rebalancing. It's a pretty balanced ETF when you look at some of the lesser ETFs like an XLK or XLE. Some of the more concentrated ones, they have much higher weighting in the top portion of the ETFs. And you want to make sure that if you're looking at an ETF that it doesn't have a super high weighting towards one specific thing. You might as well just trade that product if it does. All right, so here's your holdings. We pulled this from etfdb.com. It's a great site if you're looking for some of the holdings for any of the ETFs. They have them all in there, so you can see the distribution here. But we'll do a breakdown of on the next slide of all the products you can trade here. So for SPY, I know, Mikey, you got a couple things you want to point out here. So SPY, you get the cash dividends. You've got daily options expirations, weeklies, monthlies, quarterlies. And then you have penny-wide markets here. It's a penny tick. It's equal to $1 on the option contracts. And when you're talking about lot sizes of 100 shares, one tick would be $1 move there in SPY. When you get into SPX, cash settled index, it's notionally equivalent to 1,000 shares of SPY, so it's 10x a SPY contract. You can also get into XSP. I know that's something that Mikey has been trading recently, a couple times at least. I think that came from the chat. Somebody suggested trading that, but it's a cash settled index that is notionally equivalent to SPY, so it's a little less liquid from comparing it to SPX or even SPY, but if you want that cash settled product, it's a good one to use just because you don't have to worry about assignment risk or dividends or anything like that. For SPX, the dividend is baked into the product. So SPX, ES, MES, XSP, they're all going to have the dividend baked in there. There's no dividend payout on those products, and that's why they don't trade at the exact price of SPY. So if you look at SPX, it's cheaper than just 10x SPY, or it's more expensive than 10x SPY because of the dividend that's baked into the product. It's the same thing with the futures, and when you look at the futures contracts further out on the curve, it's the same thing there as well. SPX, there's no shares, so you'll see share volume is 0. That's because it is a cash settled index. Everything goes to cash. Whether you're long or short options, they all expire to cash. The one thing to consider here with SPX is that it's a 5-cent tick size for the option, so it trades in nickels. So every tick increment is 5 cents, which is $5. But the biggest thing is the AM and PM settlement of the options, right? So AM options are the monthly expirations. They expire to the set price, which is a ticker that you can pull up on the platform. It's SET. It's based on the opening of it's just one tick, and it's based on the opening price of all the stocks in the S&P 500. So you get the one thing that comes up is you get some funkiness, right? So you could have an open print that marks much higher or much lower because it's based on that opening print, and not, the liquidity isn't as volume, the liquidity isn't as high as when you have a closing settlement where everybody's kind of already trading and in the markets there. So we typically like to trade the PM settled expirations, which come on those same days as well.
Mm-hmm. And the reason why XSP was brought up in the YouTube chat was because I was trading SPY for a 0-day calendar spread for the last Fed announcement at 1 o'clock. And when you're trading SPY, you can be delivered shares if your strike moves in the money. So trading XSP, it's the notional equivalent to SPY, but you don't have to deal with that because it's cash settled, which also means you can hold it all the way to expiration. If it moves in the money, it doesn't matter because it's cash settled. So if you're trading 0-day stuff, XSP is super liquid as well, and I'll be using that going forward if I'm trading FOMC announcements with like a 0-day short option against a longer dated long option. So keep that in mind when you're with cash settled products. You can hold them through expiration, and you're not going to be assigned anything.
XSP does trade in nickels as well, so that is one thing to consider. You know, a 5 cent tick on a 1,000 share notional value, you know, option in SPX is nothing, but 5 cents on something that's, you know, 100 shares of SPY notional, it's a little bit bigger. Let's jump back to the previous side, Mikey. So for the futures, just to go into the futures, ES notionally 500 shares of SPY. Again, dividends are baked in here, so you'll see different prices for each of the monthly contracts. So, you know, people ask, why is, you know, the December contract trading at a different price than the November? It's because of the dividends that, you know, come on a quarterly basis. Again, there's no shares. Settlement is all cash settled here. The funky thing about futures is obviously the leverage and the delta it represents as well, because it trades off the multiplier. But for ES options and ES, you know, futures contracts outright, they trade in quarter increments. So 25 cents is the tick between each option and the price movement on the futures as well. And it represents a $12.50 value, which means $50 per point. So if the E-minis, when we talk about, you know, E-minis are down 25 points right now, or if the E-minis are down 10 points, just to use easy math here, if it's down 10 points, it's $500 if you were short that contract. So it's a very, very big contract. Moves, it's 500 shares of SPY. If you want to get smaller than that, you can get into the micro futures. MES is the micro. It's 1/10 the size. Notionally, 50 shares of SPY. So it's a very, very small product. If you're trading the options in MES, it's very, very, very small. So if you're trading, you know, a 20 delta put in MES, it's equivalent to 10 shares of SPY. So it's a very small position if you're trading those options there. Again, there's no shares there, and each tick is going to be $5, or each tick is $1.25. You're going to have $5 per point on each micro futures.
Lovely. So here's a nice large colored chart for you. So the way that we have color coded this is just looking at SPY and XSP as our 100 delta baselines. So SPY is your deliverable, where you get shares if you are assigned on short premium. XSP is cash settled, but they're the same in terms of the notional value of a product. So if you sell an at the money put in SPY and you sell an at the money put in XSP, both those products will have the same notional exposure. If you want to get smaller, micro E-minis / MES is one way to do that. So that's 50 deltas relative to SPY, cash settled product. It's a futures product at its core, so you do have the potential benefit of more leverage and by way of less buying power requirement relative to trading SPY or XSP. And if you wanted to get larger than SPY or XSP, you could go to the E-mini futures / ES, that is cash settled, or you can go to SPX, which is the big dog contract, and that's 1,000 deltas relative to SPY. That's also cash settled, but the one thing to note with SPX, like we talked about before, just keep your eye on the AM settlements. AM settlements are not based on the closing price on Thursday. It's based on the opening print on Friday, and that is the set price. So if you're trying to avoid that, you just want to make sure that you're in an expiration that does not have an AM next to it. So any of the darker shaded expirations with a W or a Q next to it in SPX will be the one that would avoid that scenario. We can pull it up in a little bit.
Cool.
And your contract month codes real quick. This applies to the futures that we talk about all the time. So if you're trying to make a watch list of different products, or we do that for volatility specifically to see the contango and backwardation, we're just typing in these different contract month codes with the year after the product. So right now, ES is in the Z contract, ES Z2, all the other ones, NQ Z2, BTC V actually, but the contract codes will reflect the month code that the contract is in.